All right, welcome to the Explainer. Let's dive right in, because we are looking at a really crucial week for the financial markets. After a pretty shaky end to last week, what happens over the next few days? It could seriously set the tone for the rest of the summer. This is not just another week, folks. This is a pivotal moment.
And this quote, it just nails it. It perfectly captures the tension. The market is getting pulled in two different directions at once. You've got these incredible opportunities, but at the exact same time, you've got these huge risks just kind of bubbling under the surface. It makes for a very tense, very uncertain environment for any investor.
So first things first, let's get a lay of the land. Where are we right now? Well, the market is at what you'd call a critical juncture. On the surface, things might look pretty calm, but there are some serious pressures building up that you really need to know about. Okay, so check this out. The S&P 500 is just hanging out right below its all-time high. And that creates this real calm before the storm feeling. On one hand, it's great. The market is at a peak. But it also means, man, there is a long way to fall if things go south. And as we're about to see, there are definitely some storm clouds gathering.
So, what are the big things? What are the events that could actually push the market one way or the other? This week is absolutely packed with potential catalysts, and we're going to break down the key players in this whole drama.
So here's a quick peek at the economic calendar. We've got some important stuff coming out of the U.S., the services PMI, and jobless claims data. Those will give us more clues about the U.S. economy's health. But yeah, the main event, the one you really got to watch with high potential impact, that's the Bank of England's rate decision on Thursday.
And the stakes for that Bank of England decision are just incredibly high. I mean, look at this. The market is pricing in a whopping 93.6% chance of a rate cut. Why? Mostly because the UK economy is showing some serious signs of weakness. But with a cut so baked in, what happens if they don't? If they surprise everyone and hold steady? Whoa, that could send some serious shockwaves through the currency markets, especially for the British pound.
Now, it's not all about central banks. This week's story is also going to be written by some big companies. We've got huge earnings reports from tech heavyweights like Palantir and AMD. And everyone's going to be listening for the answers to two big questions. First, is that explosive demand for AI tech still going strong? And second, how are the new tariffs actually affecting their business outlook?
Okay, so we've set the stage. Now let's talk about the risks. Because while that AI story is super powerful, there is a storm gathering on the horizon. These are the major headwinds that the market is sailing directly into.
So the first headwind is pretty simple. It's just seasonality. August is famous for being a really tough month for stocks. I mean, if you look back at the history, the S&P 500 has averaged a measly 0.2% gain. It's just a time when markets tend to sputter out or even drop, and that's the historical trend we're walking into right now.
The second major headwind? The job market. Last Friday's jobs report was a genuine shocker. The economy added only 73,000 jobs. That was way below the 115,000 everyone was expecting. And that's a huge red flag that the economy might be cooling down a lot faster than anybody realized.
But you know what? That weak July number wasn't even the worst part of the report. The government also went back and revised the numbers for May and June and erased a massive 258,000 jobs. And here's the kicker. This is the really crucial part. It tells us the job market has been way weaker for months than we ever thought. And that's got people whispering the R word, recession.
Okay, so we've got a market near its all-time high, but it's facing some pretty serious headwinds. It's a lot to take in. So how do you even think about navigating a time like this with so much uncertainty? Let's walk through some of the key strategic ideas floating around.
All right, so here's a potential game plan for this tricky environment. First up, just basic risk management, right? Maybe dial back the exposure a bit given the seasonal weakness. Second, think about rotating into more defensive sectors like healthcare that tend to do better when things get choppy. Third, with that Bank of England decision, you have to be careful about currency risk. Fourth, it's all about quality. Focusing on companies with solid fundamentals and real growth stories, like an AI that can maybe power through a slowdown. And finally, hey, if the economy does keep getting weaker, bonds could see a rally, so that's something else to keep on your radar.
So let's pull all this together. When you boil it all down, what's the real story of this pivotal week? Well, it's this classic showdown, a battle between two very powerful and very different forces.
It really all comes down to this one conflict. On one side, you've got the bull case.
It's all about the undeniable massive momentum from the AI boom, which could keep pushing tech stocks up. But then you've got the bear case, and man, it's just as strong. You've got a weakening economy, a shaky job market, and all these historical trends flashing warning signs. This is the fundamental tug-of-war that's going to define everything.
And that leaves us with the ultimate question, not just for this week, but for the whole market going forward. We have this incredible engine of growth with artificial intelligence, but we also have this growing storm of economic challenges. So what gives? Is the AI boom going to be powerful enough to defy gravity and keep pushing the markets higher? Or are those economic headwinds finally going to win out and pull everything back down to earth? I guess we're all about to find out.